I mean, this hit it, Joe, on so many levels. I have as many inflation hedges on as I possibly could. The only thing I know for certain, I want 5% gold, 5% Bitcoin, 5% cash, 5% commodities. Not sure about the other 80%. What do we think about that, Joe?
So I think we are going to see further inflation, Scott, because I think the Federal Reserve is going to remain anchored at the meeting on Wednesday. I don't think you're going to receive a taper timeline. I think the Federal Reserve is still looking at employment and looking at the 7 million jobs that we've been unable to get back. In the last 9 months, we've only gotten back 4 million jobs. So the growth of the Federal Reserve's balance sheet is at an all-time high at $7.95 trillion. Paul's right. That equates to inflation. I think investors need to mine for opportunities, looking for inflation protection. I've been doing it in oil. I think oil is one of the places where you can find inflation opportunity. I also think copper, that speaks to my Freeport-McMoRan ownership. And I also think real estate. I think if you look at REITs, which are up 15% quarter to date, the leading sector, I think REITs offer inflation protection. I'll give you 2 names. They're in my Quality Momentum Index. Prologis, ticker symbol PLD, and CBRE. These are inflation real estate protection, but we're going to see inflation as we go forward here in the coming months.
Okay, then John Najarian, so if you think that Joe's going to be right, and if you think that PTJ is right and will remain right, should our viewers go max inflation hedging right now? Is that the best play in the market?
Well, I certainly think we're going to be seeing more inflation as we get into the reopening, Scott, because right now, like I said, and you and I have had the discussion, there's a lot more demand than can be met by the supply of workers and so forth, many of which will go back when school's back in session, as well as when the unemployment extra runs out. So I think that will cause some nervousness around inflation, a lot more than anything we've seen so far, Scott. But clearly, it's there. You know, I was doing a big presentation this weekend down in Florida, and you look at all the commodities. I know Paul Tudor Jones is a commodity player and one of the best there is. And, you know, from lumber all the way down through the list, you go through like 13, 14 different sectors of those commodities before you get to anything resembling, you know, stocks. So, yeah, we're seeing inflation in commodities like crazy. I would hold those. We talked last week about Cliffs, CLF, Freeport's one we've had, CX, as well as a couple other infrastructure plays that I think are going to continue to get some nice flows well through September and into the end of this year, Scott.
So Josh, you know, there's the PTJ, and then there's the reality of what the Fed is going to do this week. And the Fed's not going to do, in all likelihood, what Paul Tudor Jones says they should do. And by the way, Jan Hatzius at Goldman Sachs doesn't think they're going to do anything either. He says they don't expect Chair Powell to deliver the first hint at tapering in the June meeting. We'll find out on Wednesday, but that's the expectation. So if that is the case, what are we supposed to do, says my committee member, Josh Brown.
Well, we're supposed to have a diversified portfolio that is durable enough so that if there is some sort of a taper and accompanying tantrum, it doesn't blow up our retirements. That might not be the sexiest answer, but understand something. If you're a viewer watching this right now, I promise you there's almost zero chance that you have the same financial situation as Paul Tudor Jones, who is a billionaire and able to put on massive trades and change his mind as quickly as 1 hour later. And I say that with the conviction that I do because that's actually how he's made some of the biggest money in his career, by being flexible. So this is his strong opinion today. It may not be his strong opinion next week, next month. And I don't think that a typical investor should listen to a billionaire hedge fund manager and think that they have the same investment objectives. It's ludicrous.